All the participants in the workshop on the topic overview on GST. GST, Goods and Services Taxes, a complete reform of indirect tax structure by the Union government since 70 years of Indian independence. First, we need to understand what is the present indirect tax system in India. India has a multi-layered tax system. Different provisions exist in different states, resulting in high cost of goods and services levied to the consumers. There are few taxes, mainly which are levied by the Union government and raised by the state government. Powers has been derived from the constitutions. There are shortcomings in the present system of the taxes. It causes cascading effects. It is a tax on tax in the present system. GST will be a game-changing reform by the Indian economy by creating a common Indian market and reducing the cascading effects of taxes on the cost of the goods and services. It is a simplified indirect tax structure wherein tax paid on goods and services produced by one person at one stage can be availed as credit while passing to the next stage until they reach the final consumer. The cascading effect can be avoided. It is in line with the destination based principle also. It will impact the tax structure, tax incidence, tax consumptions, tax computations, tax payment, compliances, credit utilization, and reporting, leading to a complete overall of the present indirect tax system. With GST, it is anticipated that the tax base will be comprehensive as virtually all the goods and services will be taxable in all the states at uniform rates with minimum exemptions. GST will have a far-reaching impact on almost all the aspects of the business operations in the country. For instance, prices of product and services, supply chain optimization, IT, accounting and tax compliance system. With the objective of implementation of GST, the Constitution Amendment Bill for Goods and Services has been approved by the President of India post its passage in both the houses of the Parliament and also ratification by more than the 50% of the state's legislature. The government is committed to replace all the indirect taxes levied on goods and services by the center and state and implement GST by 1st April 2017. Basic objective and the features of the GST are: GST would be applicable on the supply of goods or services as against the present concept of the tax on manufacture and sale of goods or provision of services. It will be a destination-based consumption tax. Tax will be collected in the consumption state at a destination point. It will be a dual GST with the center and state simultaneously levied on a common tax base. The GST to be levied by the center on intrastate supply of the goods and all services, that will be called as the central GST, and that to be levied by the states will be called at the state GST, that is called SGST. Excluded item under the GST would be now alcoholic liquor for human consumptions and 5 petroleum products, namely petroleum crude, motor spirit, high-speed diesel, natural gas, aviation turbine fuel. Customs duty will also be excluded and within the purview of the GST. Tobacco and tobacco products will be subject to GST. The central taxes that will be subsumed under CGST are: number 1, central excise duty; number 2, duties of excise on medicinal and toiletry preparations; number 3, additional duties of excise on goods of special importance; additional duties of excise on textile and textile product; number 5, CVD of customs Number 6, special additional duty, that is SAD of customs. Service tax, number 7. Number 8 is a central surcharge and cesses so far as they are related to the supply of the goods and services. State taxes subsumed under the SGST are: number 1, state VAT, central sales tax. Number 3, luxury tax. Number 4, all form of entry tax. Number 5, entertainment and amusement tax except levied by the local bodies or municipalities. Number 6, taxes on advertisement. Number 7, purchase tax. Number 8, taxes on lotteries, bettings and gamblings. Number 9, state surcharges and cesses so far as they relate to the supply of the goods and services. The CGST and SGST will be levied at the rates recommended by the GST Council. Though that has been fixed in the Council meeting, there would be a floor rate with a small band of the rates within which the state may fix the rates for SGST. The list of exempted goods and services would be common for all the centres and the state, which should be finalized by the GST Council. And integrated GST, that is IGST, would be levied and collected by the central or interstate supply of goods and services. Accounts would be settled periodically between the centre and the state to ensure that the SGST portion of the IGST be transferred to the destination state where the goods or services are eventually consumed. Tax paying shall be allowed to take credit of taxes paid on inputs. There is input tax credit. This has been utilized the same and payment of the output taxes. However, no input tax credit on account of the CGST shall be established or adjusted through SGST and vice versa. The credit of IGST would be permitted to be utilized for payment of the IGST, CGST and SGST in that order. Accession code shall be used for classifying the goods under the GST regime. Exports shall be treated as the zero rate. No taxes is payable on export of the goods and services, but credit of the input tax related to the supply shall be admissible to the exporters, and the same can be claimed as refund by them. Similarly, SEZ will also be like exports. Import of goods and services would be treated as the interstate supplies, and that would be subject to IGST. In addition to the applicable customs duty, IGST paid shall be available as ITC for payment of the taxes for further supplies. Laws, regulations and procedures for levy of and collection of the CGST and SGST would be harmonized to the extent possible. It would be a purely IT-based environment through the GST network. To sum up, the dual GST model will likely be a joint venture between the centre and all the 29 states. In order to make the model successful, one has to take all the states together with the compromise they enter. It is known as the ideal perfect GST system has never been practiced in any federal economy, federal democracy also. Indian government has already formed GST Council, and the Council in its meeting has decided and settled 10 issues including the rules, forms, rates of taxes. But issues pertaining to the administration of the tax is pending. By the Constitution, embargo is very clear. Existing tax system will continue up to 1 year from 16 September 2016. Registration enrollment process of the existing taxpayer has already been started. For the best. Thank you.